So what we're going to be covering in this session is how do you develop highly effective teams? What do you do to provide effective training for them? How do we retain them? And that was something that we started to get into in the last panel. So in terms of training, I think let's begin with that question. What is the approach in your financial institution or your organization in terms of doing in-house training versus contracted training? And Nathan, I think I'll begin with you. I know the ABA has a lot of training programs that you use, but to what extent do you use those programs versus in-house training?
We try to have a nice balance of both. And I guess I kind of alluded to that when I asked the question in the prior session. We have a mentoring program that we implement where we place new lenders and new folks on our agribusiness team with experienced and seasoned individuals. To use an American cowboy slang, we call it team roping, where we assign two people to a lot of relationships, one very veteran individual and one less experienced, and that gives them a great opportunity for on-the-job training and understanding. So that's a critical point. The second is we do have a formal internal training, and I lead that along with 3 or 4 of our other senior people on our ag division. And that is focused on making sure they're looking at things philosophically the way we want them to. We think we do some things a little different than a lot of our competitors, and we want to make sure our staff understands that and why we think that way and why we make the decisions we make. And so that's where we give them that type of training. But then we also give them a healthy dose of outside training too, the credit training offered by banking associations like the American Bankers Association. Actually, right in South Dakota, the state that our bank is headquartered, our South Dakota Bankers Association has what has evolved over the years to now be the national banking school for the United States. And they have 2 schools. They have a beginner's school and then an experienced lender's school. Both are 1-week schools, very valuable. It's a chance for bankers to mingle with other bankers, but get a healthy dose of real technical, ag-focused training. And we bring in a healthy combination of academics into that training, but also longtime veteran ag bankers are also instructors at those training programs. So it's a chance for veterans to talk about all the things they've learned over many, many years with those folks. And then the other is the conferences. Matter of fact, now is maybe a good time to mention, the American Bankers Association has a conference annually. It's in November this year in Minneapolis, Minnesota. And I would like to extend an invitation to any of you to come join us at that conference if it fits. I'm on that committee of the American Bankers Association and play a role with a committee to plan that conference and to deliver valuable information to the industry in a real timely manner. And I think there's certainly some overlap, and for some of you, you may have an interest in that, and we'd love to host you. So I'd invite any of you to come to that.
Thank you, Nathan. That's in November?
It is. It's in November.
Minneapolis?
In Minneapolis.
And what will the weather be like in November in Minneapolis?
It depends. It depends. But I will promise you this: it will not be like it is here now.
Yeah. That's a guarantee.
That's a guarantee.
Chandler, what about in Sri Lanka? What do you do in terms of in-house training versus contracted or outside training?
Yeah, the training that we at our bank does is firstly taking into consideration the national perspective, particularly in the area of the agriculture financing specialized area. Obviously, you have to take into consideration the national expectations, national requirement, and then you have this country. We have the western province where you are. Then there are the 8 provinces which is more rural and regional, and it's a kind of a hand-holding kind of process at the end of the day with particularly different scales of agriculture clients. So we have really, I mean, if you, from this building, you can see our HNB Towers, which is our headquarters. We have one of the state-of-the-art training facilities when one whole floor is allocated for training, not only for agriculture, but also for general banking staff. So we have a kind of evolving program, not only technical kind of training, but on-the-job training is coupled in together. So we have an in-house specialist within the bank who train them in the various aspects of it, or whether it's credit evaluation, whether it's a product knowledge, whether it's the client engagement. We also, in my first day presentation, I said that we work with number of corporate clients who are engaged in agriculture. So we expose our staff, our particularly agriculture field officers who are also graduates of agriculture universities, expose him to working with these corporate partners on the field. So it's an ongoing program. Time to time they are brought in, updated about the various new initiatives. We also work with the central bank. The central bank heavily focus on various agriculture schemes, refinance programs. So time to time we get experts from the central bank, the regulator, updated on the various new initiatives from the regulatory side and the new schemes. So it's an ongoing process, but I think we had the advantage being a bank which has over 120 years of banking in the country, starting in the tea industry way back in 1888 by two British planters, and then subsequently moving into rural areas as a result of we having largest branch network among the private sector banks, about 250 branches. So we are constantly, our field officers are exposed to on-the-job initiatives as well as technical kind of training within the banking system. But we also time to time get not only our staff, our field officers, we have a kind of initiative where we, together with our team, we expose our clients also to overseas training. We are the only commercial bank probably done in the country. Sometimes every 2 years we send a batch of clients together with our field officers to either India, the NABARD Bank, on a field, ongoing, understand the technology in banking. In fact, last year some of our team went to Israel and spent 12 days under AgriFin on the understanding of the new development in agriculture. So it's an ongoing program internally as externally, well planned.
So you have a variety of approaches.
Absolutely.
Miguel, what do you do?
Well, we were talking about these senior officers. We're a small and new organization, and I have one of these, let's say, senior managers in each office, but we've been hiring much younger people, is around 30 years old. They have had probably some banking experience, but not too deeply, no? So, and then we have all the support people that they're the ones that make the paperwork. So we have to differentiate the training of the three groups. You know? For example, for the senior managers, we train them in management, in coaching also. They have to be the coaches of their own people. The younger ones, most of them come from non-agricultural backgrounds, so we have to train them in agriculture and in credit also. No? All this cash flow analysis, risk analysis, so they are aware on what they are trying to achieve with each client. And then we have the other group, the support people. They are very young. They just finished their college studies. They are 23, 24 years old, no more. And we want to train them in everything, in cash flow analysis, in financial analysis, risk analysis, and agricultural related topics. So it's differentiated, but for us it's also very important to have a hands-on training. What we do when we hire somebody young, we ask him to go, or ask her to go to another office for a week or so, and she can work in an actual case. No?
Okay. And Matt, what's your experience?
Thank you. It's slightly different. I haven't been fortunate to be part of an existing institution. My pattern after leaving Citibank and HSBC has been to restructure existing organizations or set up new ones. So I've done it in Ghana, in Liberia, in Rwanda, and in Nigeria. And what I find is this wetware, this whole concept of getting the right people is absolutely crucial, and then training them up. But before you can do it, what I find is you really have to have your organizational structure, your policy procedures, methodology, your MIS system all in place so that when you are bringing in your human resources, turning on the lights in the key, they have a full spectrum understanding of your institution, how you want it to run, its values, its vision, the kinds of products that they're involved with. So you give them a broad-based introduction and then drill down into the specific jobs. But I think, to me, that when you start it up, it's absolutely crucial to have that infrastructure in place, because whether you're, destroying something that's existing and recreating, sort of creative destruction, it always is involving putting the people all thinking in the right path and working as teams, team building, and it's the education and training and skill sets. That's what I found.
So what I'm hearing so far is that it takes a mix, but I guess one of the questions I have, just to follow up on this discussion, is it possible for someone to advance in their career if they've not had some advanced outside training or management training? It seems to me that there's a point of on-the-job training where there's a limit. If a person doesn't take some of this additional training, their career will not progress. Is that true, or is that your experience or not? Nathan, what do you see?
I think there's certainly an element of truth to what you're saying, but I'm hesitant to say that's an always situation. I have seen individuals through on-the-job training and just real-world experience develop a tremendous skill set that made them prepared for that next level of management or senior involvement. So I think it can be done, but our bank has a philosophy driven on education and knowledge. We have what we'd call a knowledge strategy, and that trickles down all the way to our customers. We put on events regularly throughout the year to try and raise the knowledge level of our customers as well, and that's part of our strategy. It's part of our philosophy to cater to the agricultural industry, and that flows across our entire system, both to customers and to employees. Everybody recognizes the value of that.
Getting back to risk management, which we talked about on the first day, an educated customer, a well-educated customer is a better risk for you. So it makes a lot of sense to do that.
It's a big part of our strategy.
Chandler, what about with you?
Yeah, I think the career development or the is lot depends on the leadership skills demonstrated by respective field officers. And in order to do that, we have to create the path, a proper path. We in the bank, we have about 250 branches across the country, and I would say about 60% is in the regional areas where agriculture financially play a major role. And there is a possibility of our agriculture field officers ending up as a branch manager of a branch. And there are also possibility these branches are also managed by 9 regional officers and scaling up to regional level positions. So what we do is, having created that path, that them to become eventually a branch manager in a rural, more agri-financing area, then you need to really showcase that they have the opportunity to scale themselves up in the new initiatives, new ideas, the leadership, the innovations, and various things relating to that. Towards that we expose them on the field level to multiple stakeholders, whether it's a government institutions who work in agriculture, whether it's value chain operators, whether it's other exporters in the agriculture. So we are exposed them, so see how the kind of initiatives they make on creating leadership opportunities for themselves, as well as business development for the bank. And then we expose them, bring them back to head office, our training, and kind of expose them onto the more new ideas of management, a technical side of creative evaluation, and new things with regard to demonstrating new value propositions to the clients. So when we see that, then there we see emerging field officers who can take a greater responsibility. And then we are immediately line them up to take major positions in some of the branches, assistant manager level, even ending up manager level. We have a number of agriculture graduates who are initially field officers who are now managing our branches, that they have seen that this career path has been really good motivation factor for them.
So you have a career path for people that show the initiative.
Absolutely.
Miguel, in your organization, do you have a defined career path, or does it just depend?
It's a fairly well-defined career path. Like, one of the things, not only for agriculture field officers, but everybody in the bank, that demonstration of leadership skills to get a responsibility. It's a very performance-oriented culture we have. So what we see, particularly the agriculture area is a specialized area. There has to be greater involvement, and initially these field officers are considered barefoot bankers. 60% of their time is spent with external stakeholders. So we really make sure how they bring number of initiatives, number of value propositions to add value to the business sector. And based on that, we really empower them and really expose them to the new ideas and new facilities. And then at annual basis, their performance is assessed and given opportunities to create themselves and really take a bigger responsibility in the field.
Okay. Miguel, what's your situation?
We have I would say two paths. No? One is the business path, and the other the back office path. No? So what can happen is that any lending officer can progress in what he's doing actually, and we have the back office path where they could switch. We have not had yet the possibility, but they could switch from one and another depending on what they're looking for, and if their skills are good enough to fulfill the profile of the position in either side. No? So it is, let's say, it's open to let them decide what path they would like to take. No? Well, to me, it's much dynamic. It's more dynamic, the one on the business side of these two legs, and the other one is it's just office work. No? So they have to be in the office, and they don't go to the field, and they don't have contact with clients. So and we try to make them evaluate that they have in their hands the way they can grow. No? Because we try to align these paths with the income. No? Yeah. So if they, for example, a lending officer uses to start with a fair salary, but they can progress up to whatever they want. We used to say that the sky's the limit. And we have some examples of one of these lending officers that started with a very low salary, and then they have triple what they were making at the beginning. No? Mm-hmm. So we want them to have that decision in their hands. No? And another thing is that to make this path funny, because it could be very boring. No? We try to make them, we encourage them to have some, let's say, philosophical ideas, no? Trying to create loyalty. No? And one of these, for example, is they have to look at their work as a challenge. It's not the same thing every day. No, we don't want all this routines to be repeated every day. No, so we want them to see their work as a challenge for making business, for learning, to develop themselves, and also we want them to feel satisfied with what they're doing. No? So we push them in the way that, as far as we see somebody achieving their goals or his goals, we congratulate him. We let him know that everybody knows that he's achieving what was his goal, and we try to make them feel part of the organization, and then we can offer them with these two paths. No?
Yeah. Well, in the earlier session, Kashif mentioned the issue of recognition and reward, and I think I want to spend a little bit more time on that later, because it really gets to the issue of how do you really motivate and incent people? Is it through extrinsic sources or is it intrinsic sources? And so we'll talk a little bit more about that later on. But Matt, what's your experience in terms of establishing the career pathways?
Thank you. Agreeing with all the panelists, the methodologies and the issues you face we face. When we're restructuring organizations or setting up new ones, the human resources function is viewed as actually absolutely strategically critical. And the methodology that we are putting in place generally is what I call a 3-year up or out variation. What we're looking for is an incentive to go ahead and have in a mentorship role, especially in emerging markets where jobs are hard to find. Good quality jobs are hard to find. You find in institutions and organizations, people say, it's mine, I'm not going to tell you how it works. These clients are mine, I'm not going to tell you who they are. And so it's mine, mine, mine. So to break that, you have to have, yes, career progression, and then say 3 years up or out. You're in your existing position max 3 years. And if you're not there and promotable, then you should be leaving. The reason for that is it then incentivizes, because they cannot be promoted until such time as they have trained the people under them. The replacement generally has to come from within. That's the preferred path. So now there's a push. I can't get up promoted. If you want to stay within the organization and you are basically doing nothing, then you're out. And there's another reason for the out. It's not to say you're a dud or you failed. It's to create what I would call a network that is netted into the bank. Every human being who's been working within your institution, if they end up in the client, then basically from a credit reference bureau perspective, from a knowledge perspective, you got an inside view, you get what we call in the military human intelligence that will be able to reduce risk in making loans to that institution or to that organization. So it's a good mechanism. Human resource development and training. The other thing we do is to put in place loans to the personnel to facilitate their ongoing education. In many of the emerging markets, people don't have the $500 or the $300 or the $1,000 to go to a university night school and progress. So we make the loan, give them the loan. If they graduate, we forgive. Okay, and we just go step by step. So it's in-house training, external training, because external training is absolutely critical, new ideas. And
Well,
we move that way.
You brought up a good point that was also discussed. Michael mentioned, I think, Michael, you said it takes six months to become proficient. And so I guess I'm interested in how quickly does it take to get, say, a loan officer up to a level of proficiency where they really are productive, or let's say not dangerous. I mean, I know I was dangerous up to a certain point when I was a lender. And beyond that, I became less dangerous. And so I'm interested in that question. How long do you think it takes, Nathan, to become an undangerous loan officer?
That's a great way of saying it. I don't have a canned answer. I will share this. Our experience is we would prefer to bring young folks into our organization and train them, as opposed to bringing someone from a competitive organization. Generally speaking, we would prefer that. Now, it takes more time and effort, but we believe we end up with a better final product, but it takes longer. And so when we hire somebody right out of college, you might say, we bring them in as what we call an ag loan officer trainee. And that's usually a 2-year program. They're under a strict mentorship program for about 2 years, where they get exposed to every area of the bank, and then they start gearing in, really focused on agriculture. During that 2-year period, I would consider them dangerous. Yeah. Once they hit that 2-year period, generally speaking, the danger begins to decrease rapidly. But I would even say up until they're about 5 years of experience in the lending field, we still keep a very close mentorship with them. And that's just with the size of our operations. We just feel like until you have 5 years of experience, we want to make sure you're not making a naive decision or making a mistake. So that's generally speaking the time frame we would look at.
Yeah, Chandler, what about you?
From what we do is from the perspective of the agriculture field officer, we at the recruitment level, we recruit agriculture graduates from recognized universities specialized in agriculture. Once they are brought in, we kind of have an extensive training program within the bank on the finance evaluation side, very much. And then the role of the loan officer or the credit officer is multiple in our bank. It is not only credit evaluation, it is also kind of a role of advisor to the client, not only in agriculture, but understanding the business. Our bank's tagline goes as the partner in progress. So each the field officer has to demonstrate that and deliver that service to the agriculture clients. So in the process of doing that, there will be multiple accountabilities towards the client, toward the branch, because essentially these field officers work within the branch. There will be accountability to the branch as well as to our regional office, as well as to the head office overall manage these agriculture field officers. So there will be multiple managerial accountabilities which will naturally supervise their engagement. I think the more importantly, the danger factor we eliminate very much because of the fact that most of our field officers work with multiple stakeholders, which will result in eliminating the risk factor of dangers for them to be exposed into kind of the things that they are exposed in making the wrong decision. I think the close supervision is one critical factor, and the multiple stakeholders working arrangement, and particularly their role as the advisor to the respective clients is not only just giving loans across to them, making sure even politely declining them and telling them this is the way to take it. Mm-hmm. This is the advice. So that's the kind of training that we do, and we bring that external stakeholder engagement towards that, which will help our field officers very much eliminating the risk factor of becoming exposed as motivate them to give without proper guidelines.
And how long does that take to get them to an effective status?
I think that we get them very fast into that. Probably within 6 months they become fairly strong field officers who can, because essentially they come to the bank as agriculture experts, mm-hmm. graduates. And then we train them through the bank's proper evaluation system, and we have a proper credit evaluation mechanism, credit scorecard and things like that in place. Yeah. But in addition to that, really, I would say 60% of decision making take place at the client evaluation, because most of the rural clients, agriculture clients do not have that data information. So there is a lot depends on the field officer's skills and assessment. Okay. And towards that, we get number of references with our external stakeholders who are engaged, so which minimize their exposure into the wrong decisions.
Okay. Miguel, how long does it take in Mexico?
I would like to separate our three different profiles, no? For the senior ones, I think in 3-4 months they catch up with what they have to do, and they put their skills into the service of Inter.
These would be the 45-year-old people?
Yep.
Yeah.
Yeah. Well, but there are some that never, eh? Some of them have never, ever catch up. but for the most, it's about 4 or 5 months they have everything. For the relationship manager that they're starting or beginning with this kind of job, it takes them probably a couple of years. Yeah. And that's when Nathan said they become dangerous, because they can fly away. Once they have a portfolio of clients, once they have this training and they have skills that they have developed in this credit analysis and credit approach relationship with the clients, they are dangerous. They can cost you a couple of years of development, and then they're gone. We take care of them. We try to keep them in house. And for the youngest one, I don't know, I think they are ready in 2 months. It's just like they learn this fast.
That's interesting.
And they want, well, the main risk is that they want to move very fast. And if they don't find the path, they leave. It's like they're very active. You know, they want to grow fast, and well, this generation is really a challenge for us. We have to keep them entertained. You know, they are tough.